Here the ask is to tell uh, show the taxable temporary difference to be accounted for on 31st December 14 for PP&E and development expenditure. And then there are relevant facts from this question where they say that the carrying amount of PP&E on 31st December 13, hmm, carrying amount at December 13 is 310,000. Tax written down value on this date at December 13 was 230. Then they have this data related to 14. Hmm. I will align this to, I will do this left alignment. Yeah, I will increase this. Okay, okay. So we have this carrying amount of PP&E at December 13, 310, and tax return on value at December 13 is 230. The following data relates to the year ended 31st December 14. So now the data we have is of the 31st December 14. What are they saying? So the first thing is at the end of the year the carrying amount of PP&E was 460,000. So probably what we can do here, we can say okay, 31st December 13 is this amount and 31st December 14 uh, the carrying amount is 460,000 and the tax return value was 270,000. During the year, some items were revalued upwards by 90,000. So there is some revaluation, which is 90,000. No items had previously required revaluation. Okay. In the tax jurisdiction in which the company operates, revaluations of assets do not affect the tax base of an asset or taxable profits. Gains due to revaluations are taxable on sale. I mean, these revaluations are generally deferred tax liabilities, and that is what it is saying that this company operates revaluations of assets. So these do not affect the tax base, and these are taxable on sale. But these are recorded on the book. So there is a temporary difference. And second thing, this company began development of a new product during the year and capitalized 60,000 in accordance with IS 38 intangible assets. The expenditure was deducted for tax purposes that it was incurred. None of the expenditure had been amortized by the year end. Okay. So in the books, what they did on this 31st to 14, on the books, they have recorded uh, 60,000 they have capitalized. Okay. And for tax, they get full deduction. Books, they capitalize, capitalized in the books. How much? 60,000 on this date. Okay. And tax, they get full deduction. Okay. So they get the deduction of 60,000. Hmm. So book on books they did not get any deduction. That means the corporate income tax rate is 30%. Then they are giving the tax rate which is 30%. What else? The current tax charge was calculated for the year 45,000. So they have calculated the current tax charge to be 45,000. Okay. So they are asking about in respect to PP&E and development expenditures for both of this on this period 31st December 2014. What is the taxable temporary difference? Okay. So you see that I mean, the carrying amount has increased by 150, right? Hmm. So it has increased by 150, and the tax value is increased by 40, right? So year over year change is 190. So PP&E we have 190 of taxable temporary difference. But then we have this 90,000 of revaluation also. I don't think this is added to this thing here. And then here the development expenditure we have 60,000. Why so? Because for the books there is no reduction, and until they have capitalized it, and tax they have taken the full reduction of 60,000. So there will be a deferred tax liability. In future we will be paying more. So for development expenditure, taxable temporary difference is 60,000, and for capital, I mean PP&E, you know, for PP&E it uh, will be 190. Okay.